Well, good morning everybody. It is the 1st of August. Welcome to another webinar. Could you all just give me a yes if you can hear me nice and clear, and you should be looking at the Forex Factory calendar on the screen as well. Good morning Andrew, Sarah, Peter. Afraid so, 1st of August already. Where has another month gone? They just seem to be flying by, especially when it comes to trading. I used to be one of those people who used to wish my weekends away. So come Friday, I was wishing Friday afternoon to go, Saturday to go, Sunday to go, wishing Monday to be here. Monday's always quiet, so I'm wishing Monday away, and I'm really waiting for the Tuesday, Wednesday, Thursday, the main trading days of the week. However, due to my change in psychology and the way that I view life in general, I no longer wish my weekends away. I look forward to the trades throughout the week, but I also understand the balance between work life and trade life, and that balance, that understanding has also helped to level out my mentality when it comes to trading. It's helped to keep my emotions in check, so I now look forward to the weekends when previously I did not. Summer will soon be over. The markets will turbocharge again. There we go. Sarah, this is the biggest thing I'm learning right now about balance. Yeah, Sarah, I understand you're struggling a little bit with, well, a lot actually, sleep deprivation. We'll get onto that in just a moment, and I'll make a note of it. We'll give it just a few minutes for a few more people to roll in. I'm just going to refresh. My YouTube just doesn't refresh properly. Okay, it says we've got 3 people online, but there's more than that. So, okay, well, I don't know how much we have to talk about today because we're pretty much in the main trades, which is the pound. So I'll do the intro. So the purpose of this room is to review the opportunities that meet the rules outlined in the educational material at freeforex.education.co.uk. We do have news out today as well. We have for the pound at 12 o'clock, we've got inflation report, official bank rate votes, monetary policy summary, official bank rate, and then at 12:30 we have Carney speaking as well, and then later on at 3 we have some manufacturing for the dollar. So big news day on the pound, and I'm in 3 pound trades. If we have time, we will briefly skip over those because they're live trades which you guys who are fully subscribed already know about. But a few things to talk about. We've got the vote to give out today, so those of you that have been voting throughout the month for who is the most helpful trader, that will be awarded today. We've done the news. We're going to talk a little bit about risk management because I'm in 3 trades on the pound. We're going to talk about data issues. I had to manually exit a trade just half an hour ago because the data changed. And that sometimes happened and it became invalid, so I manually exited the trade, and we're going to talk through that. And I'm going to talk about a little bit maybe about Sarah as well, who I know is struggling because of the time difference. So let's get rid of the news for the time being. We will put that to one side. Just one moment guys while I clear my throat. Okay, and had a drink of water as well. I don't sound like I've just woken up. If you do have any currency pairs you would like me to take a look at, please post them in. We will take a look at them. Other than that, we'll just go through the portfolio. But before we do that, how many people have we got in here at the moment? 6. Okay, we'll come to the votes in a few seconds. Let's talk about data issues. Morning, Calm. Data issues. So, who in here receives signals? Just give me a yes if you do. Morning, Stuart. If you receive the signals that are sent out, because this was the trade we had to manually exit. Sarah, Mickle, Stuart, yep, okay. Sometimes these data issues do happen, Peter, as well. So let me bring over, first of all, the screenshot of the trade which I entered, and I'm going to zoom in a little. Now, before I entered in this high and tight flag, I measured out that this test just here did come up to test the closes of the candles, and I did that by going by right clicking on Ninja and going to show data box, and I physically read that this was equal highs, and this this horizontal line as well was a dead horizontal line, and so we came up for the fourth touch. So for the third touch, and then the fourth touch was down here. So that was the screenshot that I sent out as the signal. And if I remove that and we look at it now, look at what's happened. It's changed. And if you remember, I mentioned this the other day, and I mentioned it last week, where I actually showed you a candlestick that was almost a doji. Few hours or half an hour later, when we came back to it, it was slightly different. I don't know why the broker changes it later on. It does happen on all time frames and on all candlesticks. I remember in some webinars I was in a few months ago, it happened to somebody on the dailies, and the daily candle changed, and it happens. Now I'll actually raise this as a query with my broker, because I've got proof what it was before and what it is after, and I'm going to get my 7 pips back plus the fee. What do you think, guys, is the right decision to do here? When we had a valid trade, first of all, we enter it, and then what happens is we ended up refreshing the data, or we change to the 60 minute and go back to the 15, and the data is then changed to show this invalid. Do you think that we should hold the trade because it was valid the first time, or do you think we should exit it now that the most recent update has been done and it shows as invalid? What would you guys do? Would you stay in it because it was valid first of all, or would you exit it? I'm just going to catch up. Hey Marcus, Peter, luckily I got in late because I was driving, so I got out at break even. I took a hit for 7 pips, me personally, but Michael, my data didn't show 3-bar reversal either. No higher close third candle. Yep. Different brokers, that's what that could be, but this was the same broker, and they changed the level where price had come to. Let's have a look. Please confirm the price on investing.com brokers are like that. Stuart says exit, never, any mistake, always close. Yep. Sarah, exits, it's already broke out. Yep. Yeah, exactly. Yes, Stuart, there was 2 reasons to exit. The first one was that we did already break to the downside. And in fact, look at that now, guys. I had a 3-bar reversal just here. A nice 3-bar reversal. This was a doji. Let me bring back over the screenshot and just show you this. Now, I don't mind small changes every now and again. You know, sometimes there's updates. Nope, that's not the one. Okay, let me get rid of that. Let me show you the 3-bar reversal. It must have been this one. Yeah, there we go, guys. There we go. Look at that. Perfect doji there, and a higher close, giving us a beautiful entry on this trade. And now look at it. No longer a doji. So no higher close either. Just here. And then obviously we didn't hit the upside, so a number of differences here with this opportunity. And yeah, I agree with all of you. Manually exit. That's the best thing to do. If in doubt, exit the trade. And unfortunately, there's very little we can do about this. This is down to the broker. I don't know why on earth they would need to adjust the where price went to, or how it moved historically, because you know it's recorded in real time, so I don't know why they would need to do that. Maybe there's discrepancies. I don't know. It's something for the broker to look into, but I'll be raising that as a query. I want my 7 pips back. I mean, luckily it's not a great deal, but if this happened on, say, the 240 time frame, you know, that might have been 30-40 pips. And so anyway, it was the right decision to do. Plus, as Stuart said there, we did already break and have a confirmed break below, close below. So yeah, multiple problems there with the data. So any data issues like that, better safe than sorry. Just exit. I'm happy to take a 7 pip loss than potentially whatever it was, 15 pips or whatever. So data issues, that's what I had. Peter says exit if original data changed. Ryan, welcome. Hello Ryan. Ian, exit if not already tested. Mikkel, showing your data now. You're just to refresh the data. Yep, exactly. So if you guys have any currency pairs you want me to look at, as I say, put them in. I don't think there's anything at market. So what we'll do is, as promised, it is the first of the month, and this means it's the first month where we give out the badge for the most helpful trader throughout the month. So I hope this works. We'll give it a go. As mentioned, as I've been saying throughout the last couple of weeks, there's only going to be the badge awarded this month. This month was kind of like a trial to make sure there was no issues at my end and to make sure everything was correct. Next month, I hope this doesn't sound too bad for the person that's going to get the badge, but next month there'll be a financial reward of £200. It's about 17% of the income from the fees that the business makes. We've got about 20 people that pay, something like that. So it's about 17% of the income. And it'll be a £200 payment next month to the most helpful trader, to the person that gets awarded it. And it will be sent to them the way that you guys pay, which will be PayPal. So apologies for the person who's going to get the badge this month. I needed a month to make sure that it can't be manipulated and we can't have people doing multiple votes for themselves and various things like that. So, but if I bring over the votes, dun 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 dun. Here we go. Okay, not too many of you have voted. We've had 9 votes. I'm not included in this, so please don't vote for me. But the winner is Marcus with 3 votes. So unfortunately, I don't have a sound that plays. I don't have a trumpet. I don't have a loud cheer. Congratulations, anything like that. But what I will say is, well done, Marcus. You are going to be awarded the badge, and here comes the test. Are we going to be able to get this badge awarded to you? 1 second, I will just need to move this out the way. I do need to look at some personal data. So if you could just all give Marcus a congratulations, a well done for his hard work and dedication of helping other people. Marcus is down as admin, so he helps with the business. He's not in any way directly linked to the ownership and doesn't receive any of the fees or anything like that, so he's perfectly eligible to receive the badge. So what I'm going to do now is go in and award the badge. So fingers crossed that this works. I only tested it once when everybody was logged off, so I'm hoping for this first test it's going to work. Okay, Marcus, most helpful trader. Marcus, you're not logged in. Is there any way that you can log in so we can see the badge that's being awarded to you? I've had the IT guy working on the system, so hoping that it's going to work correctly. So here's Marcus. We're just going to wait for it to update. I am waiting on this being fixed as well, so it updates immediately. What it's doing at the moment, the chat, is it's updating from 24 hours ago and then updating from 24 hours ago to the most recent, and that makes it a little bit slow. It should update from real time, particularly on the mobile. Yay, there we go, Marcus. There's the emblem right there, voted as most helpful trader. Big round of applause. Well done, Marcus. Well done. And Marcus is, he said to me, he's off on holiday for a few days. Wedding anniversary, was it, Marcus, this weekend? Correct me if I'm wrong. My memory is terrible. Yep, there's the badge. So congratulations. Was it 28 years, was it, Marcus? Was it a wedding anniversary or something like that? Yeah, 28-year wedding anniversary. So well done, Marcus. Not for earning the badge, but for being married for 28 years. I've been married for 2. Been with my partner, well, my wife, for 15 years. But it took me a long time for me to accept her marriage proposal. What can I say? What can I say? Well done. So that's the vote out of the way. As I say, next month there will be a £200 reward. Hope that's okay with you, Marcus. This month, as I say, was a trial basis. Next month, whoever gets the most votes. So just ensure that you're in the chat and you're the most helpful trader. And the more votes, the more people that will win. Let me just go ahead and reset these votes and make sure that that works. And then you guys can start voting for your next trader. So reset votes. Okay, and okay, there we go. So let's take a look at the charts then. Can 15-year-old prisoner too? Oh, I'm a youngling. I'm only 2 years in, but been together 15 years. So data issues done. Sarah, if you don't mind, I'm just going to talk, pick a little bit on you at the moment. I did read back in the chat that Sarah was struggling, and unfortunately she said wouldn't be able to spend as much time in the chat as she would like. Sarah's on a completely different time zone to us here in the UK, and I think to a lot of America as well. Where is it you're from, Sarah? It's not Australia, is it? There's something like a 12-hour difference, is there something like that? And I know that the time difference is really playing havoc with her sleep, and having that balance between work life and normal life is really important. She's on the west coast of the US, so it's 2 a.m. there. So a big time difference. We're looking at 8 hours difference there, and pure dedication for Sarah to still be up at 2 o'clock just to be in these webinars. But I completely understand where Sarah is coming from. From her point of view, she obviously is very committed to the trading. I can tell that she's really been studying the educational material. That is seen by the breakout patterns, by her ability to spot them. But there has to be that balance between sleep and having a normal lifestyle and trading. And it's not just to do with sleep, it's just your whole work ethic as well, because if you're trading for 8, 10, 12 hours a day, you're going to be so invested in trading that your emotions are going to take over. And I said to you at the start of this webinar that that just plays havoc with your emotions, and I didn't used to look forward to the weekends, but now I do, because I understand that the weekends is family time. It's time for me to relax, for me to have time away from the charts, and for me not to be so invested in that work, because all that happens is it makes me more invested, and then I get stressed when things don't go the right way. I get angry, and it's very important that we stay calm throughout trading so that we can think rationally. And that's one of the reasons why we, when we have a trade set up, we have rules so that when a trade is valid, it's give us our entry, our stops and our targets, and we know that all the boxes are ticked for the entry of it. that when we enter, we've entered in a non-biased way, and then we allow the trade to play out. And that stops us from getting involved with the trade when we're emotional, because before we enter the trade, we should not be emotional. During the trade, it's very likely we are, because we've got money at stake. We see it go up, we see it go down, we see it go to the side, but we're already in the trade. So the thing to do then is just to simply do nothing other than maybe a little bit of risk management. So yeah, it's very important for Sarah to get her sleep. If she doesn't sleep, she's going to be deprived of sleep. It's going to affect her logical thinking, her rational thought. It's going to affect her behavior. So while I'm very sad that I read what I did, I completely understand Sarah. You've got to have your sleep. I do hope you stay a member. I'm not too sure what your plans are going forward, but I completely understand if you need a platform that's more tailored to your time zone. So but I hope you do stay. I hope you do. Let's just have a quick peek at what's going on. Are we seeing pound movement by any chance in the right direction? Slowly. So we've been over everything that I wanted to go over. Let's look at a couple of charts then, guys. Let's look at a couple of charts. Stuart, me too. So that's very important. And Sarah, hope you stay with us. Yeah, Sarah, yes, I will be a member. I just have to pick and choose what I participate in. Yeah, and we'll get to the charts in a second. There is a downside to there only being one person here that does the webinars, which is basically me. And the downside is that I'm on UK time, and so the webinars are in the morning. This is really as well when we see the market starts to move. It's UK time. It's UK time in the morning from about 6 to 10 o'clock is when we really start to see the markets move. Then we cross over into the London's into the US session as well, and we start to see more movement. Unfortunately, where Sarah is, it's kind of at the time when UK session is finishing, and a lot of traders are really finishing for the day, and we're starting the Asia session when we don't see that much movement. So what I will say, Sarah, is that this is the right time to do the webinars, but if there was more than one person, I'd love to have a webinar in the evening as well, maybe 7 o'clock, which will be about 11 in the morning your time. And you never know, as time goes on, and we have more people that are quite happy to maybe do the webinar, and they're quite happy with the trading style that we've got, and they've got a similar way of reading structure that I do, then that's a potential for somebody to come on board and start doing the webinars as well. I've said from the beginning, I've not done this business to make money. If I did, I wouldn't be giving 17% of it away. And it's just here to help me and to help others as well. I will probably need to move eventually. That's commitment for you. You would move for the trading. So we will then take a look at a few of the currency pairs. We'll take a look at the Aussie dollar CAD. I haven't fully looked at all the currency pairs. I did a quick review. It was a busy morning. We had a few trades we got in. Then I had an issue this morning, and then we had the problem with the dollar yen, and I have to create videos for them and things, so I wasn't able to do a real in-depth review this morning. So as we look at the Aussie dollar CAD on the dailies, not much has changed other than, if we just draw this out, the new low, the pullback, the new low, the pullback, the new low, then we violated structure, then we broke to the downside. Now I said the other day that I would have liked to have seen a longer extension, and I will repeat it again because it's a key part of trading this longer extensions, small pullbacks, longer extensions, small pullbacks. This is our most profitable trend continuation, and we did see another lower low, lower close yesterday, pushing this lovely rally. We've got 1, 2, 3, 4, 5, 6, 7 lovely bearish candles here, and we could now see a pullback, and the first chance entry would be right here. Let's drop down to the 240. And can anybody tell me the reason why I wouldn't be looking for trend continuation on the 240? What's the reason, guys? We can't look for trend continuation when we do something. Double bottom, exactly, Stuart. And the reason for that is because this is a rotation pattern, and it's an indication that the market is going to rotate the other way. What it also shows is that when price came down for the first test, the buyers tried to push it up, failed, and we came back down for another test, and we actually held this level. So it shows it's an area of resistance that we couldn't violate. Therefore, we don't want to be looking for trend continuation because this is showing buying pressure. So this isn't going to be a trend continuation setup I can take. Plus divergence, yep, you've got the confirmation here. I've not looked left to see if it's formed at structure. I know that we're at something like 10-year lows or something like that. I did mean to look the other day, but I've got to load 3,000 or 4,000 candles and I haven't got around to doing it. So I don't know if this is a valid double bottom. What I will say is that if you notice just here, we have not come up to retest previous structure. So if this did occur at structure, this would have been a double bottom I could take. It could very well turn into a low and tight flag. I'd have to load more data and check. My concern here is the size of this pole. I like things to be in proportion. You know, typically you'd see the pole here. It could be from this point maybe. I don't like the look of it, and I don't like the look of things that don't match what I deem to be a valid trade. It's like a back pattern. I actually think back patterns are, you know, each to their own basically. For one person it's valid, for another person it's not. With these patterns, I like them to look how I tested them, and if there's anything out of the ordinary there, like the pole is way too long than it should be, or you know, we're too tightly consolidated, there's not a space in between, something like that. If there's anything just off, I'd prefer not to take the trade or wait for additional confirmation, like a breakout and then a pullback, something like that. So let's go and take a look at the 60, and I'll just catch up with the chat again. Jamie, we get taxed, Stu, unless you are spread betting. Yes, spread betting, yep, that's true. Chris, would there not be an argument that with trend continuation you are only setting targets at a retest of the double bottom, not a violation? Yes, there is definitely an argument for that. Sorry guys, 1 second. Headset's fallen off. Yes, you could. The problem is if we came up to this level, what usually happens when we break above this level and we pull back, you have a 2618 trade. And 2618 trades, I don't trade them as a strategy by themselves, but if you ever pay close attention to them, particularly the winners, what you see is the majority of the time the winners only come down to the 61.8. They may spike past it a little bit, but typically the 61.8 area or around that area is held, and then we see the move higher. Those that come a lot lower tend to be the ones that lose. Now it's only something that I've visually picked up on over the years, but I use 2618 a lot in my trades for a lot of things really, for pretty much all my strategies, but that's one thing that I notice. And so 2618 typically, if it's going to win, it typically only comes down to the 61.8, so I'd have to take targets at the 61.8. But then again, you know, not what we got, about a 50% chance, something like that, of this coming back down for a 2618 trade. So it just makes it a lower probability trade for me. So it's not something that I actively do, but if it's something that you've tested and it's valid, then yeah, there's no reason why you could not bring that into your trading. Seeing a nice move on the pound New Zealand. Well done, Sarah, by the way. Again, I read your message about the 5-minute pound New Zealand breakout, and that actually led to the entry of the bigger 240 pattern. Who watched the video for that, by the way? Who got the signal for the pound New Zealand and actually watched the video? In there I talk about why we didn't wait for a 26.18 and why we entered based on the smaller breakout pattern, and it was the right decision. And if you're not part of the signal service, well, you've no idea what I'm talking about. But on the 240 then, nothing really. Let's go and take a look at the 60. I've had my hair cut, guys. Sorry, I keep having to adjust my headset. I've had my hair cut and it's quite a bit shorter and my headset keeps falling off. On the 60 then. On the 60, okay, I thought we may have had an advanced pattern, but we don't, because this leg here, the C leg, was lower than the A leg, invalidating that pattern. Go and take a look at the 15. On the 15. The 15. Was that a little flag pattern on the 5? We'll take a look, see if it was. It may not have been valid. AB equals CD pattern. The problem here is that this was the structure highs and we're going to violate them, so not a pattern I'm interested in. We'll take a look at the 5. Nope, this was not. Was it? Was it? It was. It was. Look at this. A lovely swing in the market. It produced a double bottom, giving us a nice pole. 1, 2, 3, 4. Targets at the 127. Hasn't as yet hit targets. Those of you that know the rules for these flag patterns, we need, it is only the 5 this, so structure may be a little bit everywhere. Around this area is where I would have looked. You can see we've come a little bit lower. But what would have been the entry on this trade? Can anybody tell me on the 4th touch? What would have been the entry? Would it have been the red candle? Would it have been the green candle? What would it have been? How much? 20 pips. 20 pips on that one. Green candle, exactly. And the reason for that, for you people that don't know, is that if the market is coming lower, we don't just want it to test our trend line structure. No, we look at it as though this is any form of structure. We want confirmation that we're going to hold the trend line. So that's why we don't just enter on the red candle. We wait for a green candle that shows that we've held structure and there is some buying pressure at that zone. So, okay, who wants to take the blame for missing it? This happened at 7:40, 7:30. I'm usually an early riser, guys. I'm usually up and by the charts at 6. For the last 2 weeks, I haven't. I've been in bed till about 7:30. To be honest, I've been pretty damn exhausted over the past few months setting the website up, doing the educational material. The spreadsheet, the Excel spreadsheet, really has taken its toll on my neck, and I'm really just taking a lot of time away from the charts, trying to get that better. I'm seeing an osteopath and also a couple of people actually that are working on my neck, trying to get that a bit better because it's really been affected over the past couple of months. So I wasn't up in time for this, but what a lovely pattern. And I spotted that from the 15, and yeah, beautiful, beautiful, beautiful pattern. I blame Peter. You know, Peter's fault. It's always Peter's fault. Peter, are you in? Are you in the room? He can't always make all the webinars, which is a shame. Yeah, he is in the room. Yeah. Okay, so other than that missed trade, which may come back down here for an entry reason, we never know. We will wait and see if that provides us an entry. Let's move the Aussie dollar CAD out the way. I'm just going to have a quick sneak peek. Are we getting close? Euro New Zealand, okay. Pound yen and pound Aussie are not moving too much. Okay, let's go and take a look at Aussie dollar, guys. Aussie dollar on the last webinar, we looked at there could have been a potential breakout pattern here. Wasn't valid, and we still broke out anyway from that point. So we'll delete that and we'll look at the higher time frame. Peter, I blame me too, and my punishment, I am short on the trade on larger triangle. On the Aussie dollar CAD. Is that on the Aussie dollar CAD, the triangle? Are you looking at this, Pete? Give me a yes if you are. Yeah, Aussie dollar CAD. Okay, let's just take a look at this. Now I do need more data loaded, but I can see what Pete's looking at. First of all, these breakout patterns are the most profitable in directional moves. And that's what's happened here. We're seeing a directional move. We are in trend as well, so it would be something I would look at. We know on the dailies we've had that confirmed break below, close below. Is it valid? Well, it's not valid, Pete, but what you would need up here, I know that you're in it already, this was your fourth touch. And the problem with these patterns is if this was in real time, you probably got involved here. You probably got involved here because the angle looks correct here, something like what, a 45-degree angle there, something like that, and you've got a red candle. Just give me a yes if that's what you used as the entry. The problem with them is they can turn into low and tight flags, and you need usually more confirmation around this area to ensure that it holds. Not all the time, but the way to do that is by dropping down the time frames, and it usually gives us some form of indication that we're going to rotate. So maybe a double top. I mean, this trade is still valid, by the way, if it's valid for you, but you would need an entry. If the market came round and double topped up here, you got the RSI that did go overbought, then maybe the divergence. We'll have to wait and see if it plays out. The only thing I will say is that the angle here now is quite, it's not as steep. And what that means is these are breakout patterns, okay? So we consolidate, so we move from one side to the other. And we coil. And what happens with that coil effect is we get tighter and tighter like a spring till eventually we pop out, hopefully in the direction that we're selling. But if you look at the angle now, this to me is not coiling at this stage enough to have the breakout here. We would probably need to see this happen, maybe even a few more. So the angle at which we get the coiling effect, in my opinion, is quite important, because Pete entered in here. It now looks as though the market's coiling significantly more, and we could now see the breakout. And unfortunately, guys, I don't have a set rule to tell you for this. I can't tell you that the angle needs to be at 45 degrees. It's just, I suppose, just a combination, for me personally, a little bit of experience of looking at the angle and also looking at the entry reason up here as well. Yeah, Andrew. Andrew says, Chris, are you saying there's not enough downward pressure at the point to make a breakout likely? Yes, that's exactly what I'm saying. This can happen. You know, I've seen this happen where we get 3-4 touches either side, particularly on the bigger time frames. We can get this. So the coiling effect is the build up of pressure like a string before the, like a like a spring before the breakout. And so the tighter this is, the less likely we are that we're going to do this. Yeah. So right now we're up at this level, and my concern now, if I was not involved with this trade, is that we're probably going to have multiple other tests. Yeah, but this is a potential. We will just wait and see what happens. It could also be a triangle, that, Pete. Again, I've got to load some more data to check on it, but yeah. I don't think that was something I put in the educational material. I may have just forgotten to add it, or it may have been that it may have just confused people a little bit too much. I'm not too sure, but yeah, as you get a little bit more experience with these, this is something you certainly want to look at. The euro yen, if we just bring that over, and we look at the 60, this is why I took the euro yen trade that lost for 30 pips. Was it on the 240? No, it was definitely the 60. So this was the triangle on the euro yen. So we'd come up to the top, and if we draw it out based on the closes of the candles, I took it from here. This is what I like to see. So we had 1, 2, 3, and the fourth touch was here. And just look how we hugged this trend line. Yeah, this is a sign that there's buying pressure here. So this is the type of movement that I like to see, and it's very often we get double bottoms that form here. And in actual fact, if you go to the 15, that's exactly what we had. Right here, you can see we actually had 1, 2, 3, 4 tests. We broke out. What can we look for now, guys? A pullback. Where can that pullback come to? 61.8 fib. So there's a 26.18 right there. So I got involved with the trade. Stops below this quadruple test just down here. The trade lost. Probably lost because higher time frame. We're looking at the market coming lower. But I was predicting a small pop to the upside. So that's the difference. Is I like to see that type of hold underneath here, or a double bottom confirmed, and a 26.18 entry. It gives you a nice reward to risk. But I was actually late to that trade. We should have got a far better reward to risk than that. I'll move the euro yen back. So yeah, Aussie dollar CAD, it is a potential triangle. And we will wait and see what happens. I'll move that out the way. Aussie dollar then, if there's no questions on that, guys. Aussie dollar. Aussie dollar. So we had a move higher, a pullback, and a move higher. We only just made a new high, and because this was not a long extension, we can anticipate a bigger retracement. And we saw more than that, didn't we, guys? We saw a violation of this level, and we are now down right at these lows down here. Now, what I love about this is just look at this big bearish run. Okay, lots and lots of selling pressure coming into a decent level of structure. The RSI has just gone oversold as well on the dailies. So there could be a opportunity to get long here on the lower time frame. I'm just taking a bigger look at price. We do have this big wick. With this amount of selling pressure, we could see a double bottom, could see a head and shoulders, or we could see the market push down and violate lower. Let's go and take a look at the 240 and see what it's offering us. Right here was our lows. We have a structure hold at this level. So I'm actually just going to reduce down now to the closes of the candles to the low of the wicks. That's where we're going to look for double bottoms and head and shoulders. Check the RSI. Did we go oversold? Yes, we did, at around 17. Do we have the formation of a double bottom. What would you say, guys? A lovely bearish run. We're starting to potentially see an arch where the market can maybe come down for a second test down here. If that happens, we end up with a nice gap. Did this double bottom come into previous structure? Well, there's our previous structure. No, it did not. So this is a double bottom that I would be interested in. Targets, where could they be? Well, just before we look at targets, when we look at head and shoulders, guys, we're looking for swings in the market. We are looking for directional movement. We're looking for a left shoulder. We're looking for a potential double-headed head and shoulders first of all. And there are multiple ways that we can look at this. We can get involved aggressively down here on the close of the candle. We can wait to see a bullish candle. We can wait for a violation to the upside. We can also then wait for a 2618, and then we can look for maybe an AB equals CD pattern, or if you believe that this head and shoulders has legs, you could look for more conservative targets up at this point. What I would say is that this is a big bearish run without a 382 retracement. We have gone from one extreme to the other without having a retracement, and we typically in big moves like this at some point see a retracement to a 382, and we haven't had that. So this is very possible that we could see a move up to this structure level just here. And if you got in aggressively down here for the double bottom, 90 pips up for grabs and probably about 25 of reward. And if you wanted to hold for second targets and play for a complete retest all the way up there, if you're a little bit more aggressive, then that is a potential as well. That's probably too aggressive for me. What I will say though is that head and shoulders, when we have big runs like this, we typically, when they're very directional, typically come up to retest the highs. I don't have any proof of that, it's just something I've noticed. But right now this isn't a head and shoulders, we're just looking at, it could be a double bottom and it could be a 2618 and then it could turn into a head and shoulders. So there's a lot of ifs and buts there, but certainly this area, this previous structure level just here, would be an area at the 382. I'd probably take targets just before the 382 at the closes of these candles. Stuart, I would like to see a higher high, higher close on the arch of the double bottom. There we go, a little bit more confirmation for Stuart, that's what he'd like to see. Cody, we have a double bottom on the hourly, which could give you a 2618 entry. Go and take a look at that. Ah, so we do. Look at that. A double bottom right here. Is this still within our price reversal zone? Let's zoom out and take a look. Yes, it is. Has it come down to test the wicks? Let's move this down to the close of the candles and the wicks. We zoom in. It won't let me zoom in without it disappearing. Yes, it is. We have a double bottom here. Okay, this makes it a little bit awkward. So we have a double bottom here, we have the RSI confirmation, so this is a valid opportunity. Now if you're waiting for this double bottom to be confirmed, this leg here has a very big spike, and for me this would not be confirmed until we broke above this level. So right now, well, we're either pushing up or down, but we've pushed up to this point, seen a small retracement and had a bullish candle here. So if you're waiting for 2618, I would wait for a violation of this candle here and then a pullback. Yeah, here on the 60, yeah, I mean the trade's valid. I'd be a little bit more cautious here with targets on the 60 you have 1, 2, 3, 4, didn't hold there, but five levels of structure here which we would need to violate for this double bottom. So I'd be a little bit more cautious here on the 60. I'm just looking at the 240. Yeah, we pretty much have the same on the 240, don't we? The 240 would be the better one for me personally, but the 60 is absolutely valid. Yeah, if you're taking that trade, good luck to you. It's not going to be one for me. I'm just going to wait. I'm just re-looking at these resistance levels that are just here. We have 5 or 6 key levels just there, and I want my risk to be quite low, and I want my stop below this level. So if we can get the risk down to 20-25 pips for around 90, then we'll look at this. But yeah, just want to be a little bit cautious of that resistance level. I think a wait for the head and shoulders would be better. Head and shoulders would be great. Head and shoulders would look completely different to this setup though. It'd be far bigger. So we'd have a move lower. You would either have structure held here and then a pullback, and then you'd look for an entry in the left shoulder and then a chance to get long. Now that would mean you would be playing beyond this area, because as a minimum you would look for an AB equals CD pattern. Okay, that's the minimum targets I always look for. And yeah, that would actually bring you just above that structure level. That'd probably bring you to that 382. Yeah, it would. So if we held structure and we saw a pullback and you got an entry on the left shoulder, if not, and it violated to the upside, and then you looked for a pullback, then you're going to have slightly better targets. But that's as a minimum. If you believe price can come all the way higher and you just have a full position, or just hold your second half of a position, then that's looking like a lot of pips up there for grabs. So the head and shoulders is some ways away, and you'd have a bigger risk here as well. Unless you got a double bottom or some type of rotation pattern here, your risk would need to be 37 plus an ATR, which is 14. So you'd be looking around 52 pips of risk if you got your entry here and you had to have your stop below this level. So many different ways of working them. I will work them every which way possible, but I will always try to work them the most profitable way with the least amount of risk and obviously the highest reward. That's what we try and do. Doesn't always work out that way. Pound on the move. Oh, I don't want to look. We're in £3 trades, and we've got pound news out shortly as well. Ooh, very nice. Very nice. I'll just bring over a few of these trades just to look at. If there's any more questions on the Aussie dollar, by the way, guys, let me know, but I'll just bring over a few of these trades, hoping to get out of our drawdown. So the pound yen. Pound yen, 85 pips up on its way to targets. I almost missed that trade. This was the one where we had the limit order for the back pattern the other day, and I removed it, the limit order, because it was night time and I must have deleted my charts. But I got an entry shortly after the news using the 5 range. I know a few of you guys are in this, so I'm hoping for a nice 100 pip winner on there. We will take the pound Aussie. I'm hoping that hits before the news at 12 o'clock, the pound news, guys, because I don't like being in three pound trades. It's my maximum, and when I am in 3 trades, I like one of them to be in profit by a fair bit. Okay, pound Aussie, let's take a look at this one. Lovely to get out my drawdown. Pound Aussie, okay, that's pushing 100 pips up now on this trade. That's the breakout pattern, the flag, And how's the other one doing? How's the pound New Zealand doing? Okay, that one is up 70 pips. So currently up 100, currently up 250 pips on those 3 trades. I will be buy my charts come 12 and 12:30, and I'm really hoping we're going to get the pound yen hit. If not, I will be moving that one to break even before the news. I got everything crossed, guys, that we're going to see pound in our favour, because I would hate for us to be in these 3 trades, be up 250 pips, and the news stops us out. It will make for a terrible week of trading, or it could give us the boost in the right direction and make for a great week of trading. Okay, it's distracting me looking at those. It's distracting me. Move them out of the way. It'd be great to get out my drawdown this week so I can start next week afresh. That would be awesome, wouldn't it, guys? Absolutely awesome. Cody, lots of news today. Yep, Peter, pound drop 35 pips in the last 10 minutes. They are breakout patterns. They are breakout patterns. Did anybody, I may have missed it, when I asked the question on the pound New Zealand, did anybody watch the video on it? And I don't know if you did. Again, guys, there's not too much in the markets, but I'm just going to point something out on the pound New Zealand. If you've watched the video, then you already know what I'm going to say about the 2618, but let's bring it back over. And just give me a yes if you are actually in this trade. And that's my Pilates teacher, who's just turned up a little bit early. I didn't at the time, but I will be watching. Okay, so this was a trade somebody spotted in the chat. Now, on the 60, we were looking at this setup. We had a directional move, and then we were looking to see if structure was held. Now, as we did this, we had violated structure. Okay, so it was not valid here on the 60, though we had triple tested up here, but it was also valid on the 240. So while I can't use the triple test as the entry, I can go down to the 240 and check that the trade was still valid. And when we remeasured this out, you can see on this time frame, we're on the wicks, and the wicks here, it was valid, and this would have been your entry candle right here. So when I went back to the 60 and I saw, okay, we have a triple test, I'm instantly thinking 2618. So I put a fib on like this, and I'm thinking, okay, great, we'll wait for the 2618, and we'll wait for price to come up to the 61.8. However, when we dropped down the time frames, we had another breakout pattern, and given how bearish the pound has been lately, it was a decision, and do we wait for the 2618 and potentially miss the trade, or do we get involved? Because on the 5 minute, we actually have another breakout pattern, directional move, and the key turning point for me was we'd actually already broken out this pattern. Going to duplicate that, move it up. So 1, 2, 3, there was the 4th right there, and we'd already broken out of the channel, violated the pole, and we saw a pullback. And just like I said on the euro yen, guys, when I was expecting price to come up and retest the pole, that's what we did in this instance. And when we came up to this level, I used that as the entry, because I thought, well, I know how directional the pound's been. We've already got confirmation this is broken out. We have a far higher chance of breaking out than we do pulling back for that 2618. It did mean that there's around 100 pips of risk on this. but it was the higher probability trade that we were going to break out. So, and that's exactly what we've done. Let's have a look at the 240. Okay, so on the 240, the trade is not valid on the 60. So on the 240 now, you could, at a pinch, say that this was the breakout here. But this candle hasn't closed, and if it closes like this, then we have the breakout, which is good. That means there's a higher probability then of coming to retest the lows than being stopped out. Of course, the next thing to do is to play for the extension, is to see if we actually violate this level just here. So it did mean it was almost a max risk trade of 100 pips. But yeah, so that's how we handled that trade. So the breakout pattern just trumped the 2618, and we were right with the entry. So, but can you guys see why it wasn't valid on the 60? That was my thing. And the good thing about this is, what does this triple top now give us? Just pop it in the chat for me, guys, will you? What does this triple top now give us? Yep, quite a few of you are in this. Triple test, 61.8. Yes, Peter, and like the rejection candles. What does this triple test offer us? Exactly, a beautiful area for us to hide stops behind. Lovely, lovely area. Where did I have my stops? I think I was an ATR back, it was 20 at the time, 63. So okay, 22 pips back. So here on the 60, this isn't a confirmed breakout for me because it's not valid. It has to be on the 240. So yeah, a nice area to have protective stops. Still a max risk trade of 100. So we will move that out the way. As I say, guys, there isn't really too much to talk about in the charts. I'm just going to bring back over the Aussie dollar CAD. Aussie dollar CAD is coming back up for a retest here. If you're going to use this as an entry, you can be aggressive, or you can wait for the breakout, giving you a confirmed double top. If you look at the reward to risk, you know, you only need your stops and ATR below the highs, and look at the reward that you're going to get if you're playing for that 127. So allow a little bit more confirmation if this is going to be valid for you. Yeah, look at the reward to risk. There's no point in being too risky with this trade. Wait for the confirmation, wait for it to break out, and you still have like a 3 or 4 to 1 reward to risk on the Aussie dollar CAD. Okay, we've got nothing on the Euro Aussie because we violated structure. Euro Yen, we know, guys, we're still looking short there, aren't we? Euro New Zealand, we will take a quick look at this. Okay, Euro New Zealand, we've spoken about this trend, move lower, pull back, move lower. We spoke about you could just use a second chance entry here, which is a lower, lower, lower close. We spoke about this in the last webinar. And we spoke about that this could give you yesterday an indecision candle, and today we are trading lower. So this wasn't one for me. Was it 300 pips of risk, something like that? Yeah, about 300 pips of risk. But it doesn't mean that we cannot drop down the time frames and look for another entry reason. We did see this occur at the 16900 psychological number, which is there. Can't remember if there was any structure. But we said that we can look for a conservative entry, maybe some form of double top, something like that. Let's drop down to the 60, and it just didn't provide anything. Nothing here at all. From the look of it, you have an advanced pattern. X to A to B, B to C. CD completion at the 886. You have a at market back pattern. I can't trade, if I was still trading them, advanced patterns on the Euro New Zealand. They were not profitable for me. But there's an opportunity to buy bigger picture, we could be looking at the market coming lower. Of course, this could just be the turning point when we rally all the way back up. Let's take a look at the 15. 15. Directional move. Little flag. Was it valid, guys? Give me a yes or a no. 1, 2, 3. Was it or was it not valid? Zala, welcome. Pound dollar, we can take a look at the pound dollar. There won't be any trades because I'm already in £3 trades, but we can take a look at it. Nope, was not valid exactly. The fourth touch, even though we got the breakout, this validating the fourth touch is crucial because it keeps us out of lower probability trades. Now I know in this instance we got the breakout, but if you go back and test, would it be profitable over time entering a potential flag pattern when we don't have the fourth touch? And that's the question you need to ask. So we can't just in a way be small-minded and say, well, we didn't get the fourth touch, but it's all right, we'll take it based on this winning. You know, you would have to go back and test around 100 of these to see if it was or was not profitable. And if it's profitable, then great. You know, you go ahead and you trade it based on 3 touches. I wouldn't have thought it would have been profitable, but I haven't tested it, so I don't know. So not too much for me on the Euro New Zealand. And pound dollar. Pound dollar is this one. Okay, so from our workings out last time, were we correct with not entering in this potential wedge pattern? I think the answer should be unanimously yes. Yes, this was not valid, and it was because of the reasons that we talked about. Not a decent swing in the market. The pole wasn't long enough compared to the trend lines. The trend lines weren't positioned exactly as I liked them. It just wasn't quite matching up to the type of trades that we want to take. And so we kept ourselves out of a losing potential pattern there. On the dailies, I'm assuming the pound's going bearish just like everything is at the moment. So structure level on at our lows just here, and you can see we're down in that area. If we do push lower, I would expect price to come down to this level just here. Let's go and take a look at the 240. Very directional move here. We had the market that was consolidating. 1, 2, 3, 4. Did it hit a minimum of a 382? No, it fell short. Did it come into structure? Well, there's no structure looking left, I believe. That would have been your only area of structure just there. Nope, it did not come into a structure level. So even though again it got the breakout, it wasn't anything that I was personally interested in. It just didn't meet the rules. 60. Was it valid on the 60? Nope, wasn't valid on the 60. We violated structure. So really isn't a lot for me here, guys. Move lower. If this was a key area I would have paid attention to. We had a small retracement, then we had the move lower, and then up here we violated structure. So this was one of those instances where structure was violated here, and then we saw the break to the downside. So I've got absolutely nothing here. If you're looking for a continuation of this breakout, then this is the structure level here on the 15 to pay attention to. You've already had a confirmed breakout with this candle. I would look for a pullback and then look at getting short for a retest of the lows, and then if you want, try holding it for the bigger extension down to this level at the 112 psychological number. Ian, no force touch. Yep. Marcus, someone need to test rejection candle strategy. Okay, so that's the pound dollar, guys. Other than that, I really don't have anything else to talk about. I actually have an appointment which was 10 minutes ago as well, guys. So if you do have any questions, now's the time to ask. Other than that, I will start wrapping it up. I want to thank you all for joining me. Apologies for cutting it a little bit short. We went over a few things in detail there, and congratulations again to Marcus for being married for 28 years and also for getting the award. And don't forget, guys, remember that the more helpful you are within the chat, the more likely you are to be voted, and we will do it again on the first working day of next month, and there will be a cash prize next month of that £200. And what I'm hoping is as we start to build up and more people join, that cash prize is going to get bigger. It will help towards your trading balance, increase your income, and if we get to a decent size, I might split it where it will be 2 or 3 payments, where 3 badges will be awarded, something like that. But we would need a lot more people to pay and to be part of the website, really. So okay, guys, well, I've thoroughly enjoyed this webinar, so I'm going to thank you. I will see you in the chat. I will be back for 12 to monitor the pound, and I will be hopefully trying to reduce down some of the risk, some of the exposure we've got on the pound pairs. And Pete, don't forget to pray. We're looking for bearish moves on the pound.